Hello, everyone, and thank you for tuning in to the North Main Minute. I'm Joshua Dobie. Big item on our radar screen right now, and possibly on your radar screen as well, has to do with the broad idea of interest rates, but then specifically, how do interest rates relate to mortgages, and specifically the interest rates that were charged on mortgages? Now, a lot of different points that we could talk about here. We're not going to get into all of them in just a few moments, but I want to highlight a couple of big items that you may want to keep in mind simply because you probably have heard, or you may have heard if you track these kinds of things, that the Federal Reserve Board has lowered the overnight lending rate to member banks here in the last several months. Now, I want to start out with understanding what that means, because that doesn't mean that necessarily that mortgage rates are going to come down. So if you're watching them closely, you may even have a question. Well, if the Federal Reserve is lowering that rate, why am I not seeing it immediately in either my mortgage or in mortgages that we are considering, or for the refinance possibilities that you may be considering as well? And that's because there's not a one-to-one correlation. You hear what I said there just at the front end of today's video, that the Federal Reserve governs the overnight lending rate to member banks. That's just a 10-cent phrase to say what they do is they have an interest rate that they charge to our local commercial banks that we have in our communities in terms of the money that they borrow from the Federal Reserve so that they can then add their margin to it and lend it out. So it doesn't necessarily correlate one-to-one that just because the Federal Reserve has dropped their rate, that those banks are necessarily going to drop their rates in terms of what kind of mortgages that they're offering to their customers. So that's the first thing to keep in mind. But the second thing to keep in mind, because you may be seeing that in some instances, perhaps even for a space where you have applied for a mortgage here recently, that rates have come down. And certainly if you look over the last couple of years, that's been the case. We had mortgages that were bumping up in the 7 and 7.5% range. Now I'm seeing 30-year fixed options that are now below 6%. So definitely some differences here over the last couple of years. So what are a couple of points to keep in mind? Well, first of all, recognize we are not in the mortgage business. So I want to be very clear about that. But we're advising folks all the time about how to manage their debt. And specifically, as for most folks, the largest debt that they carry is usually their residential mortgage. So what are, again, a couple of good things to keep in mind. First, when you're looking at some refinance possibilities, make sure you have an understanding about what the costs are first for refinancing relative to what may be a lower rate. Meaning that there are costs for refinancing, and it will take you some time to, quote, get the benefit of incurring those costs, even when you have a lower rate. Your mortgage banker, mortgage broker should be able to tell you pretty quickly, all right, if you incur these costs because you have a lower rate, your break-even point is 8 months out or 3 years out. Be able to tell you when you, quote, get the benefit of having that refinance. That's important, especially when you're considering how long you may want to stay in that home. Second big item that we bump into a lot, especially as rates drop, folks consider the possibility of cashing out or taking out some of the equity in their home as one of the things that they can do with a refinance. You don't have to, but that's one of the things that you can do in a refinance scenario. I would just caution you, as you understand the cashing out possibilities, make sure you understand what you're doing as far as the payback schedule is concerned. Is it a fixed rate? Is it an adjustable rate? How long is the term? All of that is going to have an effect on your monthly mortgage. You definitely want to take a look at that ahead of time before you sign all those pages at closing. If you'd like to reach out to us at North Main Financial Group, talk about what that means. Look at refinancing possibilities. Like I said, we're not in the mortgage business, but definitely we are connected to a number of mortgage bankers around the country who are certainly in that business, can give us some insight and some expertise. If you'd like some help with that, we'd love to help you. NorthMainFinancial.com.